Hello everyone! In today's video, I want to take a clear and factual look at the recent sell-off we've seen in the Hims & Hers stock over the past few days. There's been a lot of noise, speculation, and emotional reactions in the market, so my goal here is to separate facts from assumptions and put the current situation into perspective. This is not investment advice, just my personal analysis and assessment of what's happening right now. The stock price of Hims & Hers has been collapsing for several days now. I want to put the situation into context, so let's focus strictly on the facts. Hims & Hers had announced plans to offer a significantly cheaper version, priced at $49, of a GLP-1 weight loss pill comparable to Wegovy from Novo Nordisk. Shortly after, when the FDA announced it would take action, Hims immediately pulled back the offer. The FDA has since referred the case to the Department of Justice. There is now a possibility that Hims could face legal action for marketing a non-approved medication. According to a source cited by Reuters, the current US administration could pursue legal steps, including injunctions or fines related to the attempted sale of a compounded GLP-1 product. Hims reacted very quickly by applying the brakes. Why exactly is speculation? And I won't go there. What matters is that, according to a Reuters quoted attorney, if the company has already withdrawn and clearly stated it will not proceed, it's unclear whether a real legal dispute will even materialize. That said, this attention could also spill over to Hims injectable products. What is legally justified, what isn't, and how this plays out, I can't and won't predict. Legal disputes are extremely hard for investors to assess, and pretending to fully understand them is, frankly, unrealistic. So instead I look at the fundamentals. Back in May 2024, the whole GLP-1 narrative around Hims really began. The stock became extremely volatile and climbed significantly. Now, purely based on price action, not earnings, we're almost back to levels from before that story even started. It seems the market has largely priced out the GLP-1 growth narrative due to the legal uncertainty. In this situation, traditional valuation metrics like EV/EBITDA don't really help. Even if the stock looked attractive on paper, everything now depends on whether Hims can continue distributing GLP-1 products in the future. The company's Rule of 40 currently stands at an impressive 84%, driven largely by revenue growth of around 78%. But if GLP-1 products were to disappear fully or partially, that growth would almost certainly slow, undermining a major part of the investment thesis. It's also important to mention that the number of outstanding shares has increased slightly, which has had a small negative effect on earnings per share. Nothing dramatic, but worth noting. Analysts have revised earnings expectations downward 5 times. Current estimates sit at around 19 cents EPS. Revenue growth for the near term still looks solid, and the core business likely won't take an immediate hit in the next earnings report. But again, everything hinges on future outlook. Looking ahead, analyst revenue growth expectations drop to about 16%, significantly lower than before. Earnings are expected on February 23rd, and until then, this remains a very tense situation. What frustrates me about the current narrative is that Hims & Hers is increasingly viewed as nothing more than a GLP-1 company, which simply isn't true. There is substantial business beyond weight loss medications, testosterone replacement, menopause treatments, proactive diagnostics, and even cancer screening products. The company is far more diversified than current headlines suggest. The acquisition of a European business expected to contribute revenue in 2026 is also often overlooked. Another point that gives me some calm: Hims spends enormous amounts on marketing. Unlike pharmaceutical giants that must invest heavily in production facilities and machinery, Hims' cost structure is far more flexible. Marketing spend can be reduced quickly if a product is paused or discontinued. That adaptability adds resilience. In Q3 2025, marketing expenses accounted for roughly 40% of revenue, around 232 million euros out of 598 million euros. That's substantial. GLP-1 products are estimated to represent about 30% of total revenue. If those revenues vanished entirely, it would be painful, no question. All things considered, at the current valuation, I'm staying calm. I'm not adding aggressively, but I'm also not panicking. Identifying the right move during a legal overhang like this is extremely difficult. I'm waiting for the next earnings report. The sky is dark, but there are still some white clouds. If you want to support this channel, then please like and subscribe, and see you next time.